You see that one of the senators came out and said unemployment rate will be very high for graduates in 2 to 3 years due to AI. Subtopic.
Hello, everybody. Welcome to Bits and Bips, where we explore how crypto and macro collide. $1 of zero knowledge. The golden hand of coin fund, and Rob, the Mason, have one of our exciting guests that we've had on, and one who I'm very much looking forward to hearing from, which is Patrick Witt, the exalted advisor on matters of digital fortune. So we're going to discuss the latest in the worlds of crypto, macro, and Washington, D.C. But first, just remember, nothing we say here is investment advice, and check unchainedcrypto.com, Bits and Bips, for more disclosures. So we'll get started, and thanks to our sponsor. All right.
Mantle is pioneering blockchain for banking, a revolutionary new category at the intersection of TradFi and Web3. Follow Mantle_official to learn more. Built by the team behind Sui, Walrus is the global data layer for Web3. And with the launch of Seal, developers now get permission to access controls built right into that data layer. Together, Walrus and Seal make Web3 data private, programmable, and verifiable by default. Learn more at walrus.xyz.
All right. So welcome back. Today, we're going to talk market structure since we have Patrick here, and we'll start with that. So the market structure bill has been, and to cover some of the main points, this greatly expands CFTC authority to regulate digital commodities, building on the House-passed Clarity Act. Lawmakers have emphasized the need for adequate staffing, bipartisan commissioners, and the ability to successfully implement the expanded regulatory powers. It is a meaningful, positive step towards establishing a comprehensive, fit-for-purpose market structure framework for digital commodities in the U.S., according to the Crypto Council for Innovation. So I want to just leave it there since we have time to talk to a DC insider and expert on this. So Patrick, what would you say is going on with the market structure bill in the Senate right now, and what do you think the most important parts of this bill are?
Well, thank you for having me on. It's great to join y'all. I would say right now we took a big step forward, I guess it was last week, with the release of the Senate Ag portion of the draft. Kudos to Senator Booker engaging with Chairman Boozman to put his name on that piece of, that draft piece of legislation. And, as anyone who looked through it can see, there are a number of areas still open for negotiation in the brackets, but it was a big step forward because, as we talked about with Senator Booker and his staff, this is not the finishing line. This is the starting line, and we got to get that draft out there so folks can engage with the different portions of it. We can hear from industry. We can hear from the different agencies that will be tasked with implementing this legislation, get their technical assistance, and take this forward towards a markup. I'm encouraged by what we've seen as during the shutdown, there was a strange silver lining where a lot of the competing priorities fell away a little bit, and we had an opportunity to engage with staffs on the Senate Ag Committee and also on the Senate Banking Committee, and we made a lot of progress. We started to air some of those areas of disagreement that are going to be the most challenging to get right, not because they're partisan issues, but because they're the stickier or more complicated parts of the bill. And I'm thinking in particular with the different sections that address DeFi, those are still areas that we need to work through. But like I said, I'm very encouraged by what we're seeing from the partnership with folks on both sides of the aisle. They're asking the right questions. They're digging into the details of it, and I'm very confident that we're going to be able to get this across the finish line as soon as possible. So I won't necessarily commit to a date. I have seen Chairman Boozman come out and say that he's targeting a December markup. we'll need to coordinate that with Senate Banking and also with Leader Thune's office. But bottom line, we're moving in the right direction. Very encouraged by the progress that's been made.
Is DeFi a part of this product? It was in the House version. I thought it was de-scoped in the Senate version. I think DeFi is more than half of the point of this. So are we going to see it in the final product?
So DeFi is in both the Senate Banking version and also in the Senate Ag version. In the Senate Banking version, it actually has a bit of stronger language than House Clarity had around DeFi. All three different versions or text, if you will, have the Blockchain Regulatory Certainty Act language in there. So there are definitely big portions of DeFi that are addressed in this bill. And yeah, we're encouraged by the conversations that are happening right now, but that's definitely a more challenging part of this bill right now.
So Patrick, you're sitting there in the White House. It probably makes sense for people to understand, your role and how you're bringing it all together, and where, where's your focus? How do you get this thing done from your seat? It'd be really helpful for us to understand.
Yeah, so we're part of the White House office within the executive office of the president, and I could be wrong on this, but I think we're probably the only office that's dedicated to one issue area, which is really indicative of the importance that the president places on this topic and getting it right. There's a lot of this that has to do with executive order drafting that has happened already with the SBR, for example, and ending choke point 2.0 early on in the administration. There's follow-on actions that come from that. There's the Genius Act, which my predecessor Bo Hines, my boss David Sachs were heavily involved in making sure that got over the finish line. And now there's the follow-on regulation, the rulemaking that is directed by that legislation. Now we have the market structure bill, and then there's a number of other issues that are really follow-on or follow-through issues that were identified in the president's working group report on digital assets. So, anyone that asked what we're up to, what we're trying to get done, it's either through legislation or through agency action. But that report is a very comprehensive guide to what we're trying to get done. It's the playbook for everything that guides us.
All right, so I have a question on that front that I think will help people scope this, which is somebody who is somewhat involved in the stablecoin side of things. I testified in the House a couple of years ago. I spoke a lot with people when Genius was going through. How big of an educational lift do you think things are in the Senate for market structure versus Genius? Because I think one thing that's hard for people to see from the outside is that senators, maybe unsurprisingly, have many, many concerns, and crypto is just one of the competing things on the agenda. And one of the blockers we've experienced is not people being against, but just not being up to speed. So I'd be curious where you see us in that progress.
It's a great point. You're absolutely right. A lot of folks, they're not going to vote for something and ultimately put their name on something that they don't understand. So what you do there is you try and get them to kind of draft off of the folks that really do understand it. It's their particular issue area. Chairman Scott's been terrific. Senator Lummis, obviously a champion for crypto. Senator Haggerty during the Genius passage was instrumental. So they trust their colleagues. They know which of their colleagues they really trust on certain issues, and having them engage, putting together the white papers, the one pagers, the memos for those other senators that maybe it's not their top issue area, but they want to make sure that they understand it enough to be able to put their name on it and support it. So that process is happening. It is a process itself. You got to have a lot of conversations. You got to spoon feed it, step by step. But those folks, as we get closer to a markup date and eventual passage, they're starting to really engage and make sure that they're asking the right questions and getting the answers that they need to feel comfortable supporting this legislation. So it's happening. Market structure, I would say, relative to Genius, maybe a little bit more challenging, just because You look at stable coins, 300, to $400 billion of market cap. This is the remaining 90% of a $4 trillion industry. And people recognize that this is really the piece of legislation that addresses more stakeholders, affects more business models, goes after, some of the institutional kind of legacy piping of the financial markets. And so folks want to make sure that they're, not disrupting those in a way that's going to be destabilizing to the overall system, and that's a perfectly valid concern. It's our job to make sure that we're addressing them adequately, and that we're meeting members where they are and providing the appropriate education.
Hey, Patrick, with that in mind, is there any chance that you guys modularize this a little bit? So, hey, DeFi gets way too challenging, but you want to get taxonomy out the door. Is there any possibility that that's the approach when everything else has been exhausted?
We haven't talked about that yet. There are definitely a number of issues in this bill. There's token classification, spot market regulation of Bitcoin. Over at the CFTC, there's a number of different things in there. There's, reg crypto in the Senate version, kind of a safe harbor to allow for capital formation in the crypto space. But DeFi, we view as a very critical part of this. And, DeFi kind of gets lumped together, but I would say if you look at the BRCA as one part of it, that's definitely more of a red line. What we don't want to happen is to pass something, or rather to not pass something that then causes the innovation in the space, the development of DeFi protocols or crypto at all to happen offshore. That's what you saw with the previous administration. They took a stance that ultimately drove this innovation offshore. That's the filter that we apply to any legislation, any regulatory action that we take is, you can't bury your head in the sand and expect that crypto is just going to go away, or that you're going to be able to kill it, as evidenced by the previous 4 years. That's not possible. The cat's out of the bag. This industry is going to grow. It's just a question of whether or not it's going to grow here in America. As the president said, we want to make this the crypto capital of the world, or whether the actions that we take, or rather the actions that we don't take, are going to drive this offshore. So we want to make sure that we're maintaining our position in the financial system of the future.
So, Chris, I want to ask you, as somebody who both invests in this space and has a pretty deep banking background on the back of what Patrick just said, how real are the objections around this breaking things in traditional markets? Where could we potentially have problems? Where do you think maybe that's a little bit overblown?
I mean, that's a great question. And the truth of the matter is that this is very disruptive technology. And I published a piece on this a couple of years back, and we need to be state principles focused, and the best technology should win. And like, I'm a fiduciary. We've talked about this before. To the extent technology enables something like tokenization, which is simply a better product, then as a fiduciary, I should use it. But what we shouldn't do is say, hey, wait a second. This technology is going to be disruptive to all these legacy business models. Hey, Robert Leshner at Superstate just issued canonical equities on chain. So guess what? You don't need that legacy custody apparatus anymore. That's really bad news if you're a legacy custodian. And yes, disruptive, but gosh, if we can figure it out and we can bring more utility, we can create better capital formation, then we should actually encourage the legacy players to use it. So like, this used to make me crazy. In fact, the settlement that you get, we talk about this all the time, Austin, the elimination of Herstat risk. Like, why isn't Basel, why isn't BCBS pushing and encouraging public blockchain use and elimination of Herstat risk rather than trying to protect the old system? So, I think a little bit of disruption is a good thing. By the way, like, I spent a ton of time with traditional players. They get it. Like, they're investing, they're moving forward. Sometimes they wish they had a little bit more time, but you know what? There's some amazing partners, across our portfolio and beyond that can really accelerate them. So may the best technology win is how I think about it.
Yeah, and I'll pile into that and also say, I think we saw this dance a little bit in the stablecoin. My God, stablecoins are somehow going to break the entire banking industry and deposit industry. But the reality is we heard those same arguments with the launch of money market funds back in the day, and it didn't do anything of the sort. So a lot of the pleading that we see that, quite frankly, is just people being like, protect our business model, I think is overwrought. To me, the question as we look within things like DeFi is, are we going to break anything that actually would fundamentally damage the experience of US capital markets writ large? Ram, I'm curious for your opinion here. If we get this moving and it works, what do you think the impact is on markets?
Well, there's a short and long term. I think in the short run, you may well see some pricing in. If you look at the Genius Act, that was a moment of peak excitement, and a lot of digital assets have sold off since then, including stablecoin issuers like Circle. Now, some of that's anticipation of the unlock also. So I think it could be a sell the news event. This is more of a markets transition topic, but I think it could be. It'd be a good hurrah, and then it's probably a lot of rotation. Every cycle there's a new layer of capital that enters the system. In the last cycle in 2021, it was Michael Saylor and MicroStrategy. So what happens is the OG investors say, "Here you go, Michael, have my Bitcoin." And then what happens the next cycle? Here's Tom Lee. "Here you go, Tom. Here's my Ethereum. Here you go, Eric Trump. Here's my Bitcoin." And that's just the layer. That's the process of joining the digital assets ecosystem. That's the next layer. And BlackRock, here you go. You have some Bitcoin.
So, one, I think yes. Two, and Chris, this is a topic I think you and I have been back and forth on a few times, but as we wait to see if we can reconnect Patrick, I want to raise the other, I'm going to call it, I think, predicted sticking point in this, which is, how do you think about KYC, AML, and identity in this world? Because if I go and talk to very traditional markets people, right? Like I were to go talk to the folks at one of the big banks or some of the large asset managers or DTCC, they'll say, listen, to use Ram's example previously, like, yeah, Michael Saylor can buy Bitcoins from whoever, and he can sell Bitcoins to whomever, and that's fine. Bitcoin is to some extent just an object, and as it moves around, we may not like the people who own it, but it is not, call it per se, destructive of the system if the North Koreans end up in possession of a little bit of Bitcoin. We prefer they didn't, but like, it doesn't cripple the system. I don't know that we can say that about stocks, right? Like, if the North Koreans get a significant portion of Apple, they can't have a board seat, is something that I've been saying previously. And I think one of the break points in market structure ends up being, how do we conceptualize KYC, AML, and those controls? And also, if we think about them, to be honest, where do we put them? It's very different to say you need that at a protocol layer versus saying that you can attach that to specific tokens or in very niche implementations. Chris, I'm curious, what do you think? Because like, looking at the debate around Genius, I predict that may be the breaking point.
So I'm going to turn it back on you as a stablecoin guy. Why do we have a dual standard? And I know that was some of the stuff we were talking about last night when you were on 60 Minutes. Why do we have a dual standard for stablecoins versus other assets? Right. So Genius Bill thought it was acceptable, US dollar hard cash. The issuer has to KYC the person to whom they issue that stablecoin. And then from there, the onus is on the individual who holds that asset to make sure that they comply with laws. Right. So if I have any Tether, whatever, stable USDC, if I send it to the North Koreans, I've got a big problem in my hands because I just violated OFAC and sanctions, right? Same thing should go for securities, but why are we treating tokenized securities, or why is there this desire to treat tokenized securities different? And I think it comes down to standard. Would love to get your take.
I mean, all right. So I wrote a paper with V about the structure of securities markets and the evolution of how we got from where we were prior to the paperwork crisis to where we are today. And I think some of the answer is just that we literally did not previously have some of these capabilities. Patrick, welcome back. We're on everybody's favorite topic, which is KYC and AML. And so one of the things that I think is true of the current system is that fundamentally all of the banks are kind of looking at their feet with a flashlight, right? If I'm JP Morgan, if I'm Citi, if I'm Wells Fargo, if I'm B of A, I don't have access to the other people's ledger. I only have access to my ledger. And when you look at a global public ledger, even if it's pseudonymous, the amount of data that we can potentially take in is very different. And I think if you look at Genius, okay, so back to senators who have been very constructive and call it middle of the road on crypto. Tillis had previously introduced an act in a prior Congress called the Enforce Act, where they very much tried to say, okay, it would be insane to tell everybody to KYC everything on a blockchain. That's not workable because this is a new space. But on the other hand, it's also insane to tell somebody, hey, once something's out your door, you have literally no responsibility whatsoever, even though you can now see a public ledger. So I'm curious, at least as I watch the progress of market structure, how quickly people can get their head around a middle road, which is to say something like, if I'm an asset issuer, I have a tokenized money market fund, I have a stable coin, I tokenize Apple stock, and it trades even in semi-permissionless fashion. What obligations do I have to look outside my door and still look, call it out at the world, and determine, hey, I may not know specifically who that is, but that's a wallet that's like one hop from the North Koreans. Maybe I should do something here.
Yeah, I think you're exactly right. There's an opportunity here to modernize, enforcement, supervision for these different agencies. You're exactly right that a lot of these different regulatory agencies don't have the tools. They're dependent upon third parties, market participants, to provide, tip-offs. But as you said, everyone's just kind of looking at, um, they're looking through one lens. They don't see the full picture. The other thing that this opens the door for is the opportunity to algorithmically do a lot of the oversight that needs to be done. There's a massive amount of data. Obviously, we're bringing a lot of compute online these days. It's an opportunity to kind of marry those two together. And for the folks that don't understand the crypto space quite as much, some of those senators that want to make sure that we don't pass anything that then threatens our national security or enables terrorist financing or cartel financing, this is actually, you should be some of the biggest supporters of this, because from an enforcement standpoint and just from a opportunity to actually ingest massive amounts of data and be able to do the kind of tracking, but do it in a way that makes us more efficient and also increases kind of the hit rate on truly nefarious activity.
Yeah, I'll pile onto that and say, for any of the politicians or staffers listening to this, do not underestimate what Patrick just said. There are programs not just with the financial regulators, but also with the Department of Defense looking at this exact process. And a lot of what we're finding is, as we create a richer set of data around this, where you can combine social media data with financial transaction data with blockchain data, you're going to capture a lot more, not less, of the financial crime. And the fact that it's new and has been used by criminals does not make it worse. To some extent, it's a skill issue. There's much better tools for us to interdict. And it's the question of criming that ladder of like criminals versus law enforcement.
Yeah. Hey, Patrick, you're a vet. I'm a vet. I think we shared, we share a lot of the same values. I remember how pissed off I was when I saw that Binance, I think it was head of compliance, so you could barely buy an AK for $600. That's fine to say unless you're on the other side of that AK, like I've been. But there's this interesting challenge between, everything that all the time we're seeing Zcash going crazy right now, and this really important part of finance, which is privacy. As you're talking to senators and congressmen and really trying to navigate that, how do you think about the balance of privacy versus the public nature of blockchain? Those discussions coming up along, and how do you navigate that?
The discussions haven't taken place too much. It's more of, just kind of monitoring crypto Twitter. Obviously the people that are in this space that understand what we just talked about, which is there's the potential oversight. People can, as a government, more data or more control over finances. We saw, what can happen when you have financial actors that debank people based on their politics or based on their views on particular issues. So threading that needle is going to be a challenge, but I'm definitely mindful of the fact that we do need appropriate enforcement, and we want to make sure that we're getting after bad actors, but at the same time, we have to do it in a way that preserves people's ability to control their finances, to transact, with whom they want. So that's going to be a process. I would say that the technologies for privacy and the technologies for blockchain and oversight are going to run in parallel with one another, and it's going to be, I would say, an issue that is going to develop over sure that we're trying to appropriately balance individual liberties with the potential of this technology to be used for harm.
How is the partnership on the Democratic side of the aisle looking for that in the Senate? Because I know there were some fits and starts around Genius, but ultimately there was a significant amount of Democratic support for that act. I'm curious how the feeling is right now, with the caveat for everybody, this is not dispositive of where we will end up, of course.
I'd say during the shutdown, we actually got a lot more engagement from Democrat senators, from their staffs. So the partnership has been good. There's the 12 Democrats that are signed on to their market structure principles, and they straddle both Senate banking and Senate ag, and then some that are off both committees. Part of the challenge right now has been a little bit of who are we actually negotiating with? Trying to negotiate with 12 individuals might be fine if there's one designated leader, or for particular issue areas, there's one person or two people who you can deal with. Right now, it's a little bit of kind of dealing with the entire group, and obviously within that group, they have varying opinions on certain issues. So as we get closer to the finish line, I think there's going to be subgroups that form to handle certain of these more tricky issue areas. But that's still a bit in flux right now. But I would say very encouraged by the partnership that we've seen from certain, more kind of crypto forward, progressive in the small p technology sense and innovation sense. Some of those members, Senator Gillibrand, Senator Booker on the ag side, they've been great, and we're encouraged by the progress that's been made.
All right, so another one. Chris and I both know Mike Seelig. The CFTC is an important part of this bill, and obviously we've got to get him confirmed so that we have leadership over there that will be in place for this. How are we looking as we think about the impact of the shutdown to the Senate calendar, to being able to get all these things through? I know December was on the table. Do you think that is, I'm going to call it a certain timeline, or is that one you would like to hit, but this could leak into next year? Like, just again, being aware of a calendar, how do you see that playing out?
I mean, I think Chairman Bozeman recently said, he's targeting a markup date in December. I think in talking with the leader's office, it probably makes sense to have Senate Banking and Senate Ag operate on the same timeline. So we'll need to check with Senate Banking on, how close they can hew to a December timeline. But the president wants this on his desk as soon as possible. A lot of that is a function of floor time in the Senate. Getting it out of committee is one thing, but there's also going to be a process after that to get a final vote on the floor. So I can tell you we're maintaining the pressure, gentle pressure, but consistent to try and move this process along and have those difficult conversations that we know that we need to have, whether that's hammering out token classification, DeFi, certain other provisions. We just want to get folks in the room. Our job in this is not necessarily to dictate to the Senate, how to run their chamber. We're certainly not going to do that, but making sure that they understand it's a priority for this administration and get the right folks in the room on issues where there are executive branch equities, make sure that we're providing them timely input. What we can live with, what we can't live with, what are our red lines, so that they have clarity and they know the space within which they can operate. So again, encouraged by the momentum and confident that we're going to get it done. Wouldn't necessarily commit to a date, but I would say we're very optimistic that in the Senate at least a vote this year.
All right, so Chris and Ram, I think we have about 5 minutes of Patrick's time left, if I'm not crazy about where we are on the clock. Do you guys have any final questions you want to throw in here?
No, thank you, Patrick.
All right. So if
Yeah,
not,
thanks.
I've got one more final ball on that one.
Go ahead, Austin.
So one of the problems, and Patrick, you referenced it earlier, was things like Operation Choke Point 2.0. And I'm going to call it the rogue actions of some regulators under the previous administration as they were dealing with the crypto space. How are you guys thinking about the interplay between, we've got Genius already passed, we've got market structure hopefully passing, and then having the regulators treat things in a fair way so that industries are neither being, call it, favored nor disfavored inappropriately this time around?
Yeah, I think Chris had mentioned this earlier. We want to be as technology neutral as possible. And, we believe as most industry observers, folks that know, blockchain technology enables, more efficient payments, settlements, different business models that can pop up. And so we don't want to favor crypto, at the expense of TradFi, but at the same time, we don't want to hold back a technology that holds so much promise because it's threatening to incumbents. That's the natural part of that would be like yeah, passing regulations to prevent the development of railroads because the horse traders are concerned about what it might do to their existing business model. That's just not the American way. We are forward thinking. We want development in this space, and we want to make sure that whatever we're doing doesn't privilege one group over another, but rather allows everyone the ability to innovate and move things forward. So, I'm encouraged by what we're seeing right now. Some of the traditional players are definitely, they're monitoring the space. And I think they're also recognizing that there's opportunities for them to get involved in a way that maybe in the early days, call it 2 or 4 or 5 years ago, they kind of viewed this as a head-on threat. They're now viewing it as a way to modernize and update their own business models and get involved in the space. You've seen a wave of M&A happen recently. I think that's going to continue as folks realize that it's an opportunity for them to actually provide their customers with better service, to tap into other business lines that right now with their current models they aren't tapped into. So folks are digesting that and evaluating ways that they can get involved.
Last question for me. Your boss is obviously looking at AI as well. Are you seeing a lot of AI projects cross over into your world with crypto and policy-wise?
We're starting to a lot more. The application of AI, large scale compute, as we talked about, the open nature of public blockchains, all the data that is there, the ability to tag together these two different technologies. I think the business models that will pop up in this space that marry blockchain and AI are yet to come. There are some in the space that are already starting to do that, but I think there's going to be some giants that are born out of the marriage of those two technologies.
Amen.
Well, for my part, Patrick, we don't want to keep you over the time you said you had. So I want to say thank you very much for joining us. I think for people who don't see inside the political machinery day to day in the United States, there's a tremendous amount of work behind the scenes to get all of these things done. Like, you see people speaking and you see the votes, but the amount of hours behind all of that to make anything move is immense. So thank you for your work. We really appreciate it.
It's a privilege and an honor. It's great to work with David, a visionary leader. The president sets the tone, and he's made clear that this administration is going to be pro innovation, pro technology development, in the same way that the United States was a leader in the traditional financial system. We want to be a leader in the same way in the future financial system. I pinch myself sometimes. I think I have the best job in government, and there's more to come.
Keep going,
All right.
sir.
Thank you very much.
Thank you.
Mantle leads the establishment of blockchain for banking as the next frontier. UR is the access layer that transforms Mantle Network into a purpose-built vertical platform, the blockchain for banking, that enables financial services on-chain. UR unifies and vertically aligns Mantle's focus on payments, trading, and assets. MI4, METH protocol, functions FBTC, supported by developer grants, ecosystem incentives, and the industry-leading distribution platform through the UR app, Reward Station, and Bybit launch pool. All economic activity within UR will be captured by Mantle Network, to further drive value to token holders and establish its significance in blockchain for banking. Follow mantle_official to learn more. Meet Walrus, Web3's data layer, solving on-chain privacy with Seal. Think of Walrus as the vault and Seal as the key. Together, they give developers fast, composable access to data with encryption and permissions baked in. That means new possibilities like token-gated datasets, AI marketplaces with enforceable access rules, game logic that only reveals when it should, even DAO governance flows where data stays private until the right moment. From AI to DeFi, Walrus and Seal make the data layer more powerful, practical, and secure. And yes, we use them too. Go to walrus.xyz to learn why Web3's leading teams are building on Seal plus Walrus.
All right. So we are back, and now that Patrick is gone, we're going to spend the next however long crying uncontrollably over the state of the markets. Ram, as I look at this, Bitcoin 91K and dropping, I could say things about alts, but I think Chris will just rage quit. So I'm just going to lob this one over to you. What are we seeing what the hell is going on, man?
Yeah. Well, I'll take a step back and zoom out. The highest level, what's happened is that since the April lows, you've had an incredible rally in high beta assets. That includes digital assets, includes uranium, includes retail Twitter stocks like Hims and Hers. So that whole complex had an incredible rally. And the most crowded names in there are just selling off. Well, first off, that entire category, this high beta stuff just selling off. Other themes like data center theme are also selling off. So that's the broader tidal force that's impacting asset prices right now. What really kind of pricked that enthusiasm was when the Fed had a hawkish cut to the day that was the top in the market. And you can see the CME Fed Fund futures probabilities went from a 96% probability of a December cut to now it's a 45% probability of December cut. When that number gets to zero, you can say confidently that the news around the Fed has been priced in. So what's happening is markets are pricing in a world where the Fed isn't just ginning up liquidity. They maybe are acting responsibly or something, right? So that's one driver. Now the other drivers are obviously the government shutdown. That's in our rearview mirror, of course. That's in our rearview mirror. But that added a bit to this. So that's where we are. We're seeing rotations. Healthcare is working. I would say on digital assets specifically, what we saw over the summer was this IPO bonanza around these digital asset treasuries. And, IPOs are an exciting time because everyone gets excited. How do I get access to the next allocation? The early IPOs do well. The later IPOs don't do too well. And there's a lot of issuance and supply that the market has to carry, right? So that starts to weigh on markets. We're on the other side of that. A lot of these trade at discounts to NAV now. And when new money gets burnt, when they touch the stove, instead of getting a warm apple pie, they get hurt, they pull back, right? So that has changed the psychology and sentiment. You add to that fears around a 4-year cycle and just the reflexivity of markets. I think where you are now is people will sell into rallies on digital assets. Are we oversold? Yes. The fear and greed shows lots of fear. The challenge with that is, and I agree it is, like you will get some tactical rally some point between now and year end. Timing that's extremely hard. The challenge is that when you've seen levels of fear that we've had and you haven't seen the bounce, you haven't seen that, then it's evidence that you do have a regime shift. The other thing I would add to this is that we had a deleveraging event. We had a credit event in October when you had this forced automatic deleveraging. Recall back in 2021, we had 2 deleveragings. One was Luna. The second was FTX, Genesis, the whole complex. Those were 2 credit deleveragings. We just had one recently. Those create confidence shocks too. So that, there's a big party with the Genius Act, and you have these issues hitting the markets, and there's a broader impact of high beta selling down. So that's where we are. This is going to get digested. So I'll pause there.
Yeah, let me chime in, Rob. I totally agree with what you're saying. I think there's a different regime change that's underway as well. When you talk about the ADL liquidation, that's largely a retail phenomena, right? And I think to your point, crypto has largely been a retail-driven market since inception. I think there's a regime change coming. I mean, we can maybe talk a little bit about Cantor last week, but the institutions are definitely here. They just don't move so fast. And so as they're marching forward, and every day I have a new meeting with a new major institution thinking about how they're going to set up their settlement layer, with the new layer 2 or whatever, they're just methodically moving forward. We still have major gaps in market structure that need to be solved. I've talked about this over and over again, like futures. How can an institution go into an alt or to an alt dat if they can't hedge it out? It's too volatile for them. So I think that's the other regime change that's coming that's actually positive. It just takes a lot of time.
I mean, I'll also pile in and say, I think one of the things that you find when institutions show up, Chris, to your point, is that their concerns are not always identical to those of retail as well, right? There's probably a little bit more discipline to process and accumulation in some cases, but also just differential questions that are being asked. I want to hear what you guys have to say about the Cantor conference, but I'll say one thread that I've constantly been getting as I talk to more institutional people getting into this space is questions about where is the value accrual, which is something I don't think there's been as much retail discussion about. To put the question plainly, is it possible that Solana is the platform of the future, but the value does not accrue to the token holders? Right, is something that I don't think there's been a nuanced discussion about. So I do think, call it the total mind share approaching the space may not be the same kinds of minds as in the past, which could really change price action. But you guys were both at Cantor, right? What'd you hear there?
It was the best conference for digital assets, bar none, in my view. I know we've all been to our fair share of conferences. A lot of decision makers, C-level, risk managers, leaders across the ecosystem. So it was called the Digital Assets, AI, and Energy Conference. They had OpenAI CFO talking about their energy needs and how they're fueling that as well. They had a Undersecretary of State talk about how Europe is falling behind due to their approach to regulation and really over-regulation of technology and innovation. There was discussion around the need for energy, more abundant, cheaper energy, all forms of energy, and including and especially nuclear energy. It was a lot of, I thought it was very insight rich and just an amazing group of people that were together. Chris, what was your perspective?
It was one of convergence. I agree. Exceptional conference because the people there, it was essentially the senior leadership and royalty of, the entire crypto industry showed up. And to me, the biggest theme was one of convergence. You had the convergence of AI and crypto. You had the convergence of TradFi and crypto. And then the other thing I've been thinking about was, I met a ton of the DATs, and it kind of all comes together because a lot of the people who are leading those DATs are some of the most senior people in crypto, some of the, the leading personalities, et cetera. So it was just this incredible group of folks with just, a lot of gravitas, but a lot of convergence. To me, this was an institutional moment. And Cantor has been at the heart of a lot of capital formation, DATs, et cetera. So, yeah, I mean, it was the conference, one of the top conferences I've been to in my life.
So Cantor is the new Goldman Sachs now. That's another takeaway. I mean, they're the primary investment bank for these digital asset treasuries. I read recently that they're on pace to generate $2 billion in revenue.
I think more than that. I think I saw 2.5. Yeah.
So that's the subtext here. When Howard Lutnick joined the White House, he appointed his two sons as co-CEOs, and I believe the head of the equities business is also kind of leading there. But Cantor has positioned itself as the center of this. Now, recall also that Cantor is also doing investment banking for Tether. The CEO of Tether and Polymarket also presented. And I've been wanting to get into the Tether equity for like years. Unfortunately, it's expensive and it's like fully priced in my opinion now. And it's like the girl that got away kind of thing for me now. It's like I was the first one to find this thing. Now, I mean, we were all looking at it in our group, in our circle, but now the whole world is looking at this thing as efficiently priced. But what I thought was there were a lot of insights out of his speech, Paulo, the CEO speech. First off, their roadshow and messaging and delivery was exquisite. They positioned Tether as core to U.S. policy. Remember, over the past few years, we've been talking about the rise of the BRICS, Brazil, Russia, India, and China, and their attempts to displace the dollar. They positioned Tether as dollarizing emerging markets. And they used the word about adding resiliency to the US dollar system by creating more decentralization of holders of dollars. I mean, like as an American, you're supposed to be behind Tether. Obviously, Scott Bessent, Treasury Secretary, gets that. And they talked about Tether Ventures. They talked about how the fastest growing stablecoin is a gold-based tokenized product, which I was not aware of, that Tether also issues. So, Tether, extraordinarily well positioned. They have the CEO of Polymarket, talks about now. Recall in the last admin, Polymarket was nearly shut down in terms of the inquiries they were facing from federal law enforcement. Now they just did a round of, what was it, $8 billion valuation. I don't think they have any revenue, by the way. $8 billion valuation. They went from zero to hero. It was a great conference, and let's talk about the discussion of the future of betting markets and how you're going to see these event markets play a more important role in hedging risk. Instead of looking for an indirect hedge on, say, a political outcome, you can identify the market and express more precisely. It's a lot of thought-provoking stuff.
Yeah, I'll give you another example on the complete other end of the spectrum. I heard Gary Vee come in and say, yeah, guys, hate to break it to you, but your grandkids are going to be marrying bots. Get ready for it. He's like, hey, it's no different than Tinder. Like it used to be this like scarlet letter if you met your wife on the internet. Now everyone does it. He's like, so get ready for it. And then Danny Ives is like, don't worry about that. We'll make sure that they're humans if, they're trying to, come at you online. So, I mean, it was just very thoughtful conversations across the board. And again, but to me, it was all about convergence.
All right, so I'll pile in here. Actually, I think with both a comment and a question on the back of that, which is, Ram, you mentioned the amount of money that Cantor is making this year, but as like a longtime banking person, I've got to remind everybody, investment banking cycles are highly variable and highly cyclical. Like that is not a forward going number that you should just expect year after year. You're going to see large ups and downs. So the two questions I take from what you guys are saying is, one, how much of this is, call it real, like baked right now that we're very confident will work, will continue to work? And how much of this is just, call it the hype that you get at the higher ends of a cycle?
Let me add to your point. First off, excellent point. It's cyclical, just like markets are. IPO, investment banking, underwriting fees are highly cyclical. That speaks to the DAT craze that we just saw. Adding to that, there's also a presentation from Brad Garlinghouse, the CEO of Ripple. They announced at their conference week prior that they had raised money from two of the most strategic and significant investors out there. Citadel's everywhere, by the way. The world is not ruled by Goldman Sachs. The world is ruled by Citadel. And also Fortress. Fortress is a very shrewd and thoughtful credit fund. Now, that announcement occurred recently. That deal, my guess is, was struck likely months ago. And so if I look at that, usually at the top of the market, you have deals that get done that just don't make any sense. I'll add to the mix. Erebor. We saw an Erebor. This is a bank that just got an OCC charter. Palmer Luckey's name was slapped onto the PowerPoint. Wasn't really a founder. I've heard from seed investors in that business. It was an overshot deal. They put Palmer's Luckey's face on it. It got a $2 billion valuation. So these are the kinds of silly things you see near tops of markets. I talked to a friend who's launching a venture fund. He's a founder of a successful digital asset protocol met in Miami. And I said, you're now the 581st venture capital firm in digital assets. There's 500. Do we really need another one? So these are the things that give me pause. And then when you look at hype versus substance, the promise and tokenization is incredible, but the hype is ahead of the delivery. So I think these are some of the reasons why you may have seen a top in digital assets, and why you're going to see, I think, some rotations ahead.
Yeah. At the same time, the foundation's still hardening. So I was at that conversation with Garlinghouse as well. I mean, what's an episode with us if we don't mention Ripple, right, guys? But he made the point as well. He's like, I used to be the second largest market cap, and then I think I dropped to 5 solely because of people like Gary Gensler and Austin's friend Amanda Fisher. Really came after him. So like, my point is that at the end of the day, you are seeing a lot of, despite the near term, cyclicality and maybe some of the hypeness that you're talking about, Ram, you still have this foundation that's getting set. That is a very positive tailwind that remains.
Right. Like in the internet, the dot-com bubble, there was legitimate innovation. It was all legitimate. The internet did transform e-commerce. It did transform financial services. It did transform medicine. Now we have telehealth now. It all happened. Timing still matters in markets. So right.
I would also say, I think this is back to the dichotomy at times between investing and actual economic progress, right? It can totally be the case that a market is massively overvalued, but the technology or businesses are still massively important, right? And that is part of what we saw in the original tech bubble. Your point is like, yeah, that may have traded at stupendous multiples that were not justified at the time, but that's not a refutation of the internet. That's a refutation of some individual variables there. Sort of what I'm trying to pick out of this, and I'll be honest and say I don't have an answer yet, is ignoring maybe Bitcoin. Are the things we've seen the things that will have captured the value 20 or 30 years from now? And I'm not certain that the answer is yes. I'm also not certain that the answer is no, but it's one of those, like, nobody in 1999 at the peak of the previous tech bubble was being like TikTok, right?
No,
like that just was not a thing.
That's a great point. Austin, I'll add to that. It's hard to identify the winner. Look at how incredibly competitive payments is. You've got the old guard trying to be relevant with JP Morgan and tokenized deposits. And by the way, they have a credible team. You've got Citibank at the CEO level talking about tokenized deposits. Then you've got PayPal involved. You've got Stripe entering the scene. Western Union teaming up with Solana. The competition is so intense. Can you identify the winner? At least we could identify Amazon. Maybe you were early by a year, but Amazon was the emerging dominant market leader. And they got to a point where they didn't need to issue new shares. So if you know that, then you can hold your nose and hang on. I don't know that I can identify the winners in this market. I don't know if you guys see winners. It's an incredibly competitive market. It's a well-financed market with high valuations. So I want to choose the games I can play where I have an edge. I don't know that I have an edge in picking the emerging winner. And we talked about, one of the use cases is trading. Now Hyperliquid's on the scene. Hyperliquid is, which I think is really compelling story, by the way, out of what I see out there. But now you've got Astor backed by Binance. They're on the scene now. Part of me thinks is this the DOIDX from 2021? Then someone else shows up a quarter from now. So it's just a challenging market. I think if we're being objective about it.
Yeah, and remember, most of these projects, Bitcoin and Ethereum aside, are less than 5 years old. So people forget how early it is. The other thing is that, if you're a developer in the space until a year ago, you may have gone to jail. And as that starts de-risking, you're going to see some of the 30 million developers in the world say, wait a second, this convergence thing is happening. Every company is a DAT because it's holding a digital asset in some way, shape, or form. I need to be part of this. So I think we're really, really early in the cycle. I think you're going to still see the TikToks and the Facebooks. Could it be some of these projects? For sure. Some of them have beautiful product market fit. Prediction markets are on fire right now. I mean, I just saw an entire segment on Sunday, the Boomer Sunday CBS, whatever I watch, and like there's Polymarket and Kalshi all over it. So you're seeing a material shift in the narrative, and a lot of these technologies like prediction markets are now mainstreaming. That's exciting.
Is the 60 Minutes the equivalent of the Economist magazine cover, where it's rearview mirror, and now grandma in Target knows about prediction markets? So I think there's an Inuit tribe in Alaska that may not have heard about Kalshi at this point, or Polymarket.
Yeah, I think they just found out.
They were just found out last night, right?
Yeah.
So the bull case is this. It's always good to ask ourselves, what's the bull case? So here, I'll lay out that side of things so people don't have to take Prozac or psychedelics, whatever the latest thing is here, serotonin and whatever. That's just all right. So,
I think it was shrooms. Wasn't that what Brian Johnson was doing?
That's Brian Johnson. That's the new theme.
Yeah.
New theme, new meme. So one is you're going to have a new Fed chair, and that Fed chair will be dovish. And that Fed chair will be able to influence policy, not set policy. Obviously, there's an open market committee that sets policy, but they're going to have a big thumb on the scale. And Steve Moran is now a member of the FOMC. He's an outlier in that view, but you'll be less and less. That's a significant consideration. That's one. Two is there's talk about this $2,000 stimulus. Again, requires congressional approval. Congress likes to spend. Midterm elections are coming up. Does something like that happen? If yes, you're going to get an impulse. I think assets get sold into that impulse. I don't think it's sustainable. It's not the same scoping and magnitude of 2021 back-to-back $1 trillion stimulus, but I think there will be an impulse. So that's two. Third is the promise of AI innovation is real. The promise of payments innovation and lowering of transaction costs and real-time settlement is also real. So that's what your bull case would look like. You've obviously got good seasonality right now, and things are technically oversold.
I guess another thing I would throw in on the bull case front is that everybody is incredibly bearish right now, right? Like if you look across Twitter, if you look at sentiment, if you look at fear and greed, everybody, like I don't have a single person in any of my timeline and any of the chats that I'm in being like, Bitcoin is totally going to 250K. Like we still believe that, right? And so score that as at least one for Michael Saylor not going down as the MySpace Tom, right, of this space and time. But, you know, counterpoint, every once in a while, everybody's bearish and it's right. So like see FTX. All right. Well, Chris, you had one topic you wanted to troll me about for a bit, but I think we're out of time today because we have fulfilled our contractual obligation to mention XRP or Laura will get mad at us.
Yeah, but good job last night on 60 Minutes. If you guys didn't see it, Bit and Bit's own Austin Campbell was there front and center. What was that like, Austin?
Okay, so Chris, you've done this before too. And one of the things I think you don't see from the outside is that they record a huge amount for a show like 60 Minutes. They probably got half an hour of tape of me, and then they use like 12 seconds of it, right? They basically find the best things that you've said that fit into the narrative to tell a story. One thing that I think is super interesting, though, and probably you don't see this from the outside to the point of this starting to become mainstream, though, is as I've been dealing with the media for years, the level of understanding here is getting significantly higher. So they were looking, you know, as a reporting team at how to tell the story. And literally I was like teaching them how to use Arkham. And then they figure out, oh, wait a minute, I can track all these wallets on chain. I can see all of this data. I can use all of these tools. It is a whole different level of sophistication. And so I would tell everybody who thinks that was an anti-crypto piece to pump the brakes, go back and listen again for when anything negative was said about crypto as an industry. And I think you're going to have a very hard time.
I listened to it twice. I'll take that side of it.
Okay.
So one, the way they portrayed CZ, they didn't introduce him as the founder of the most successful international digital assets exchange. They portrayed him as, they said, it's accurate. He is legally a felon. But to summarize someone with one word without sharing the full picture, then they use the term, quote, when he walked out of prison, the imagery around that. Every single time they were factual, but painting a brush where they were advancing a perception that they wanted the audience to hear. The third one, they're talking about, they were talking about CZ and Binance financing like Hamas and all this stuff. But they did it through, firms that violate BSA/AML may be known to do. It's like, but the way they string these words together, I thought that was just unacceptable, and it was completely slanted and biased from that perspective. Even the last closing, they said when there was a $2 billion investment, they made it look as if $2 billion transferred into the family, in the Trump family. The reality is that it was a source of liquidity on Binance for a pool. Yes, there's a commercial relationship. That's accurate. That's correct. But someone that's not in the industry or is critically thinking about this and can parse the language would walk away saying there's a $2 billion wire transfer, and this is not accurate. So I thought.
But hold on. That's not the point I'm trying to make. And here's the media shift. So I agree with you that I think they were painting Binance in a negative light in light of this activity. But my point is they weren't carrying that over to the entire crypto space. Like, if everything you said is true, nowhere in there did they imply like Coinbase is doing this, or like, Ripple is doing this, or like Ethereum Foundation is doing this. And in past pieces, people would be like, well, look, this one person in crypto did this bad thing and the whole space is exactly like that. I think we've leapt beyond that to the point where now there's becoming differentiation between actors within the space, which is a sign of maturation of a space within the world, right? And crypto is not just like one big ball that like SBF, same as everybody else in crypto, is not the thing anymore.
I guess. I mean, look, what's their main headline? Their main headline story isn't around crypto, though, right? The headline is a commercial relationship between Trump, World Liberty Financial, and some others. So I guess. But Chris, what's your take? You saw the show last night.
Hey, any press is good press for the industry in a way. I'm serious. Like, the fact that we're even talking about crypto and it's hit, the most mainstream audience of all, it's probably pretty good. 50% of the people that watch, I mean, probably not 50% are Republicans, but every Republican who watches that is going to say president did nothing wrong. I'm overgeneralizing it, and they're even getting more entrenched on getting excited about crypto. So like, I think by and large, whatever, like, are we surprised? People are looking for juicy stories, but the fact that crypto is part of the mainstream narrative is not bad for our space, and I think its brand is cleaning up in time. So we're becoming less and less fringe by the day.
Quick question for everyone here, and it can be short form response. Was the pardon of CZ appropriate given the facts and given historical precedent standard? I would say yes.
I will say no. I'm on record as having said no.
Okay.
Like, I'll say it this way.
Okay.
I think there was unfair double standards between CZ being sent to jail and bank executives not being sent to jail, but I have pretty firmly been on the side of yes, and we should send those bank executives to jail.
You're saying
so I will agree with you that CZ was not treated in the same way as bank executives, but I don't think that should exonerate CZ. I think the CEO of some of these banks or their chief compliance officer should have been doing jail time.
There was violations at BSA/AML, no question. I'm not disputing that.
And sometimes knowingly at the banks as well. Like so here's a good example. If you guys are familiar with the HSBC case, where like literally you had dudes rolling up with boxes the exact size of the teller window with round numbers of bills and just shotgunning like 30 of them through, and then HSBC being like, seems fine. Like, how can you have that fact pattern and not send anybody to jail?
Right. So I think we're saying the same. I say, look, it was mistreatment, it was disparate treatment of individual that didn't match the historical precedent for similar deficiencies in an AML compliance regime. And if you're going to have rule of law, you should have fair treatment. So, but 60 Minutes don't talk about that.
Yeah, that's the part they cut out of Austin's part, right? We probably talked about that for 25 of the minutes.
Well, I was going to say I did talk to them about that part. I would tell you, I think if you were to shoot the 60 Minutes team doing that up with Truth Serum, they would have wanted all 60 minutes for that story because it's a pretty complex hairball.
Yeah. Cool, guys.
All right. So on that note, we will be back next week. So thank you for joining us for this episode of Bips and Bips. Until then, everybody, take